Hi, this is Dave Baran. I'm here with Baxter Hines and Carol Goforth for another update with Honeycomb Digital Investments. This week, we're going to be talking about ETFs and how a number of financial services firms are filing with the SEC to launch a new product. Today is March 30th, 2021. A year ago, Bitcoin was trading at $6,400 a coin. Today, it is bumping up to $60,000 a coin. And as one might expect, a lot of folks are getting interested that might not necessarily have been paying attention 365 days ago. Baxter, Carol, thanks for joining me. And let's just kick it off. With talking about the different firms that have filed S1s or that have started to get certain regulatory clocks rolling. Baxter, do you want to lead with Fidelity's announcement?
Sure. It's not, like you said, just any firm. It's the big firms. So it's Fidelity, it's Goldman Sachs, it's Van Eck, Skybridge, Anthony Scaramucci's firm. So you're talking big institutional players that have a lot of clout in the financial industry. They are looking to get into Bitcoin. And you mentioned that, a year ago, a lot of people weren't paying attention. If you're watching CNBC, if you're getting on the internet, I don't know how you couldn't be paying attention, or at least being, alerted to what's going on in the digital space. In fact, Deutsche Bank, the big German European firm, they said, you can't really ignore digital assets anymore. And so I think it's a sign of the times that you're going to see increasing numbers of firms looking to develop infrastructure to get their clientele into this new type of asset. So I think it's a sign of many things to come. Whether or not you actually get approval for the ETF, that's a different question. Carol, I'm going to let you maybe start off taking that.
Okay. Actually, I think probably it's really important to understand a little bit about what an ETF is and why that's different than just, another opportunity to buy Bitcoin. This is an opportunity for small people to buy Bitcoin and not have to worry about any of the complexities of holding their own wallets. They buy an interest in this ETF, but they buy on a regular stock exchange. They don't have to have their own wallet. They don't have to know anything about the technicalities of how Bitcoin operates. They just buy into the fund, and then the fund trades like stock, trades like shares, and trades on a regular exchange. So investors may be much more comfortable in that kind of an investment opportunity. The SEC has had the opportunity to consider ETFs from all kinds of players. The Winklevoss twins, for example, and Gemini have had proposals, and time after time, to date, the SEC has said, no, we are worried about the possibility that Bitcoin is subject to too much market manipulation. And so we are not going to approve any of these. And this was under the prior administration, under the leadership of SEC Chairman Jay Clayton. And they were very consistent that we're just not sure that this is the right time. They were so insistent in saying no that one of the commissioners, Hester Pierce, said, this is ridiculous. We're now no longer just, requiring adequate information. We're starting to regulate on the merits because you've got somebody here who just doesn't like the risk. And the problem with that is we're not the ones who should be deciding how much risk an investor wants to take. You move forward today, and we're not looking at just players who are from the Bitcoin or crypto ecosystem, but people who have extensive experience and reputations in other kinds of ETFs. And as you said, they are the big market players. Fidelity is huge. And for Fidelity to come in and say, we really think that this is the time for an ETF, that is huge. 20, 30 days ago, you had Van Eck coming in, starting the 45-day clock, running for the SEC to actually make a decision on theirs. As you've mentioned, there are, I think, a total of 6 that I know of that are actually in the approval pipeline right now. And you have a number of things going on. We've got 3 Canadian Bitcoin ETFs. We have an ETF from Brazil that was just recently approved by their securities folks. We have a pattern of holding. If this was really an asset that was being manipulated, when it spiked up to 62,000 per coin, you would have, I think you would have expected to see a rapid sell-off. That certainly happened back in 2017 when it spiked up briefly to 20,000 per coin. You did not see that this time. The price did not immediately drop. You didn't see the major holders pulling out. And I think that degree of consistency, that degree of interest, the involvement of big players, all of those are really positive signs, even though we're under, a Democratic administration where, we need to really, really protect the small investors. And we've got that mindset to worry about. So I can't tell which way the SEC is going to come out, but things are different now.
Yeah, no doubt. I mean, when you have, again, the caliber of the firms such as Goldman and Fidelity coming in, at a minimum, it's going to lead to credibility in the individual retail investor mindset to this asset class. And so that is going to have people thinking, maybe I should be getting into this thing. Maybe I can't ignore it anymore. And it's really bodes well for Bitcoin as an investment. Again, I don't know whether it gets approved or it doesn't get approved. We've got to take a wait and see kind of approach, but you've got a fixed supply of Bitcoin capped at 21 million coins that it could ever have. That's the max. And then you have this exponentially rising demand, whether it's more and more people getting into the space, whether it's better infrastructure, whether it's a more favorable regulatory environment. And so that, from a supply and demand economics 101 standpoint, it really does bode well to thinking, the price of this is probably, going to continue to go higher. So I think, we have a lot to watch, but this is definitely a milestone for cryptocurrency as an asset class and for something that everyday investors are going to have to consider.
So, I mean, you touched on a few things, but what is different now than 4 years ago, 3 years ago, where there's, what do you think as far as folks being interested in not only launching an ETF, but also from the regulators, even just humoring these firms when they look to launch something like this?
Well, from the regulator's standpoint, we wouldn't be the first. Obviously, you've got the Bitcoin ETFs in Canada. And the first one, I think, is doing really very well.
Not one day of outflows so far.
Yeah. And then you've got Brazil. I think you have a significantly deeper pool of major investors who have a reputation that, Tesla is not going to be manipulating the market price. And honestly, if you look around it, you see what happened with the Reddit and the Robinhood. You can have market manipulation in stocks too. It's not this horrible, unique problem only associated with crypto assets, cryptocurrencies, with Bitcoin. And the regulators can catch it and can do something about it. So when you have a better understanding of what's going on in the markets, you've got more familiarity with it, you've got more players, you have folks who are making the application that have experience in other ETFs and have their own reputations and have sizable financial reserves behind them. I think that's different than the first times that the SEC saw applications. And it really is applications from different folks, from major players in the investment world.
Right. I mean, 18 months ago, you didn't have anyone who could custody cryptocurrency in a professional manner. You didn't really have any kind of sort of name brand venues that could trade or hedge or all these other kinds of products that would be necessary to have an ETF that the SEC would be willing to approve. All of that, all those mechanisms have been put in place since then. The other thing that I would say is just the ever more expanding volume that's taking place in Bitcoin. It's debatable as to how many dollars flow through it a day, but I think even the most conservative estimate would say it trades more than Apple stock would trade by, at least a factor of 2. And then you got to remember, Bitcoin trades 24 hours a day, 7 days a week, no days off. Whereas something like Apple, you've got market holidays, you've got the weekends when it's totally closed. And so, and it only trades from whatever it is, 9:30 Eastern time to 4 o'clock Eastern time. So you've got this pool of liquidity there that's been ever growing in the crypto world. And so I think that also bodes well for an ETF product where would likely be a lot of volume and dollars going its way.
What about other cryptocurrencies? Is there any sort of discussion or any sort of hope as far as an ETF, which would be available to the masses more and make things easier as opposed to just holding other cryptos? Or is that something you think it's going to be more of a wait and see when it comes to the SEC and how Bitcoin works?
I've heard rumors. I've read some reports about Ethereum, Ether. That's the only one that I've seen mentioned. And that's the only one that the SEC has said is not a security. So, when the SEC decides to make Ripple and the XRP token, which at the time that they announced that was the number 3 in terms of capitalization, number 3 crypto asset, and they decide to make it a target saying it's a security. And that had the kind of profound immediate impact on market prices. Until that, where do we draw the line? How much of a market do we have to have? How decentralized does something have to be before the SEC is going to say this isn't a security, so it's okay for folks to trade it as a commodity and not as a security? I don't think you're going to see anyone taking the risk of trying to do an ETF in anything else. But Bitcoin, even if these guys are turned down, we're going to see proposals in the future. And I think it's possible that we could see a request to do one in Ether as well.
Yeah, I think Bitcoin's definitely the icebreaker. Speaking of just round numbers, I don't know exactly what the market cap is today, but let's say $1 trillion of market cap for Bitcoin. The next one in terms of size is Ether at 200 billion, let's call it. Then it drops off pretty far after that. So Ethereum would definitely be the next logical one. But as you continue to go into other cryptos, the market cap gets smaller, the volumes get smaller, and it may take some time before I think you see anything other than Bitcoin and Ether. That would just be my guess. But I've learned in this business, you never say never.
Yeah, the 24-hour trading volume of Bitcoin right now, I just pulled up my coin market cap, $55 million worth of crypto traded in the past 24 hours of Bitcoin traded.
Yeah.
Isn't that amazing?
That's incredible.
Hard to see how even a whale, even a major player could really manipulate when there's that much trading going on.
Right.
Well, anything else, Mr. Hines?
I think we've hit the high point.
And I certainly think it's a great topic to think about and something to watch. And we'll have news soon because the SEC is going to have to act.
And the next time we talk?
That's probably about right.
All right. Well, thanks again. Thanks again for joining me, and we'll speak again in a few weeks.
Perfect.
Sounds good.
Thanks so much.